Hello everyone, welcome back to Upside Down Data. Today I want to introduce our new risk indicator we just launched for Tezos and its native token XTZ. If you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter where we put out regular updates about our risk indicators and more. So if you're returning to the channel, you've seen these types of graphs quite often. What I'm showing you here is the price history of XTZ over time. Price is in logarithmic form. Each dot here is a day, and each day is color-coded based on the output of our risk indicator, the upside-downside potential indicator, or UDPI. Score of 5 means high risk. That's when the upside potential is quite low, downside potential is quite high. And a score of -5 is when the downside potential is quite low, upside potential is quite high. And so what you can see is that I've color-coded each of these dots to the output here. And when XTZ has been in these green areas, you'll see that that's historically been an advantageous time to be buying XTZ. And then these red points have historically been advantageous times to be distributing or selling XTZ. And our risk model does a really good job of identifying these points. And so you can imagine trading on these points, one would have been able to accrue more profits than just holding the asset over time, for example. Now, one thing I think is kind of notable about XTZ's price chart, one thing that's kind of interesting about it, is just how explosive and volatile this asset has kind of been throughout its history, right? You see regularly these massive swings to the upside, followed by corrections all the way back down. You know, these huge explosions up, followed by big corrections. And then even during bull runs, there's a lot of volatility going up here. You know, these big run-ups that are followed by these 50% corrections. You know, big run-up followed by a 50% correction. Big run-up, and this was actually about a 75% correction here before we just had this recent big run-up coming out of the summer down into this more recent correction. Now, of course, one of the things that's notable in the news, at least right now, for XTZ is that, you know, it just had this big pump yesterday. It just went up 35%. And one of the reasons it probably did that was that they recently announced a partnership with Ubisoft, which is a game developer, to develop an NFT platform for them. And so that might have been this kind of bullish catalyst in the news that then prompted this big spike. And so you can see the XTZ has kind of reclaimed a lot of the ground that it lost during this more recent crash, when Bitcoin had its flash crash and then dragged the rest of the crypto market down with it. And so currently XTZ is actually sitting in a not too bad spot. I mean, obviously it's down from the highs it was able to put in the fall, but this pump has really been able to recoup a lot of that loss that it had realized during that flash crash. Now, one thing that's important to keep in mind is we don't really know what Bitcoin's going to do yet from here. You know, if Bitcoin is able to hold its current levels or start pushing up again, then I would expect XTZ to be able to hold this level and be able to push up as well. Frankly, I'd expect a lot of altcoins to do quite well if Bitcoin's able to resume its uptrend. But if Bitcoin continues to show some weakness or even has to go back down and retest some of those lower levels in the mid to low 40Ks, for example, it's possible that XTZ will give up some of these gains that it accrued more recently, that even after seeing the 35% pump, there's just general market weakness that might drag it down. And so I think in terms of what, for short-term predictions, you know, I think it's hard to say whether or not XTZ is going to continue its run. One thing that is for sure, though, is that at least internal to XTZ, so kind of ignoring outside market conditions, it's not overheated right now by any means, right? You know, we just hit down into these green zones down here around -2, and now we bounced back up a bit because of that big pump that we just had yesterday, that 35% pump, because it's kind of had the risk model is updating its beliefs. We can see this a little bit more clearly if I just show the raw output of the UDPI over time. So on the y-axis here, I've just put the UDPI output, and then this is just over time. And so we can see was this crazy explosion out of the summer where we were at almost the lowest level of risk we've had. The only time it's been lower risk is back here in late 2018. And then we had this huge explosion out of the summer to the highest risk, actually, that XTZ has ever printed on our risk model, the highest level that's been recorded. And then kind of some choppiness around some of the volatility that occurred up during that run. You know, there's actually a lot of volatility during that run to finally put in its local high at around $9. And then we had XTZ kind of correcting off of there, then really correcting more recently before now bouncing back up off of that pump. And so one thing that's interesting to see here is that the risk level for XTZ does seem to kind of be consolidating down at this lower level. And of course, it's unclear, you know, if the broader market conditions flip bearish again and Bitcoin drops a lot with everything else, then it might be that XTZ is going to also fall, and then I would expect risk to fall along with that if the price of XTZ falls further. But even frankly, if XTZ continues to hold this current level, the risk might actually keep lowering a little bit more. Where I'd be more expecting risk to kind of keep going up or really catapult up, because if XTZ is able to maintain this momentum and actually put in a big breakout to the upside, that's when risk would really probably try to start updating to the upside as well. But certainly when we look at this, it's not to say that XTZ is certainly not overheated right now by any means. It's like even after that 35% pump, it's still relatively low risk right now. So, 0 point being kind of this break even, right now it suggests that there's more upside potential for XTZ than downside. Now, again, that doesn't mean that XTZ can't realize more downside in the coming short term, right? So if Bitcoin dumps or if adverse market conditions hit, it could absolutely fall into these lower risk levels. It still has room to move to the downside according to the model. The model thinks it could still move further, but the model just thinks that overall it has more room to move to the upside than downside. That its downside potential is more limited than its upside potential in the current moment, which suggests that it isn't in a terrible position right now. But then if you're asking the question, is this a good entry point for XTZ? Now, obviously, I'm not giving financial advice, but there are things you want to think about, right? If you think that Bitcoin is going to have difficulty holding its current level, or that Bitcoin is going to have a difficulty in immediately going back and pushing into new highs in the short term, if you think that December might be a more cautious month, then you also have to be more skeptical about altcoins as well. So even altcoins that are sitting at relatively low risk right now, it might not be the absolute best entry point if the market kind of sells off further. It could be that the price will fall further down. And that's a little bit where your thesis kicks in. We talk about this a lot on the channel. Do you think that Bitcoin is at a strong enough position right now that it will be able to hold its levels and push up? Or do you think more consolidation might be needed? I think we're too early to tell if Bitcoin has really put in the bottom for this dip or not. Personally, that's my opinion. I think the month of December will be very informative in terms of whether or not Bitcoin has really kind of consolidated and that we're not going to see lower levels before pushing up, or if more weakness might be following. And so that might be one reason to have caution with altcoins, that even with an asset like XTZ that did just put in a really impressive pump yesterday, even in these pretty bearish conditions we're currently in, that doesn't mean it's immune from further downside if Bitcoin and the broader market corrects off. So just something to think about. And obviously that's not FUD or not me trying to dump on XTZ on a fundamental level or anything like that. That's completely beside the point. I'm just talking about short-term considerations in terms of how we might want to interpret this current risk level. Because that's what you want to do. You want to think, okay, it's low risk, but do I think it might be to a lower risk point, in which case that might be a better entry point? And obviously those decisions are up to you to make. But certainly where we stand right now from a historical perspective, it's pretty advantageous. If we go back and look, when we've been at these similar risk levels in the past, kind of in these light green zones, kind of like here, it certainly hasn't been a bad time throughout history. It just hasn't always necessarily been the best time. Like coming into the summer, it started turning green here, but then we went and hit those really deep green levels down here. And so certainly you wouldn't be very upset if you bought here. You'd still be in profit for sure. But it's just suggesting there might be other entry points that are more advantageous. So none of that's financial advice. You should form your own decisions. Just some things to keep in mind. So to talk more about XTZ's current risk level, we actually sit at negative 1.16. So the risk has rebounded notably off of its low that it had put in, down here at about negative 2. But still, overall, the model thinks that the upside potential of XTZ outweighs the downside potential. And so from that perspective, it is kind of a positive risk-reward ratio on the asset. But as I mentioned, you always have to take that into context of the broader market. And if you think the broader market might have more selling off to do, then it could be that XTZ will just offer even more advantageous position next. And that goes into different things you can think about with these models is, with entries don't always have to be all or nothing. You don't have to put all of your entry money in at one given time. Sometimes people advocate for more of a weighted DCA strategy or dollar cost averaging, where maybe you just use these models, you look at the different levels and you say, okay, I'll put in some fraction of the money between 0 and 1. I'll put in a larger fraction of the money between negative 1 and 2, then an even larger fraction if it ever hits between negative 2 and negative 3. And essentially what that would do is just be a hedge in case price and risk falls further from here, that you haven't just dumped all your money in here, then you lose out that opportunity. But of course, the risk of that approach is that there's no guarantee we will go down to those lower risk levels, and so there might be extra money you have on the side that you would never invest. So those are some other ways you can think about using these risk models. So not financial advice, you form your own strategies. But one approach you can take is, instead of just doing all or nothing based on the current risk level, you can kind of use this dollar cost averaging approach based on the level that it's at, and do the same thing for taking profits. Take some fraction of profits here, take a larger fraction of profits here, even a larger fraction of profits here, because there's no guarantee it'll ever get back up to these levels again either, that'll ever go back to the super high risk levels. So just some things to think about. And kind of to look at the broader market. So we're currently tracking 22 different assets with our UDPI indicators, and we're adding more every week. So if you want to keep apprised of those, make sure to subscribe to the channel and follow us on Twitter. And I think the big takeaway you can see here is that certainly XTZ is not in a bad spot, but XTZ is also not alone. Look how many of these assets we're following have fallen into the negative territory. Just several weeks ago, it was very few assets actually that were sitting in the negatives. Most of them were up in the positive. Just look how far risk has fallen across the crypto space. And again, this doesn't mean that risk can't fall further, right? None of these are bottoming out at all. They still have plenty of room to move to the downside if that were to happen. But what's suggesting is that the downside potential is getting more and more limited now relative to the upside potential for a lot of these assets. And really kind of the more silver lining for this correction, obviously no one's been enjoying this. No one likes to see this kind of blood in the water or blood on the streets that we've been seeing with this correction. But in terms of market health and market structure, really what this could end up being, potentially in the long run, it might take a few months for us to realize this, but it could be kind of a reset of the market, a opportunity for risk to fall across the board, for upside potential to get accrued, for people to for consolidation to happen, to kind of exhaust all the people who are looking to sell and just kind of retain all the people who have more conviction. And then after that, we might be able to see some more big pushes to the upside. Maybe not quite as extreme as that of the summer, but something sort of similar to that. The last time we saw risk fall this low on some of these assets really was the summer. That was the last for some of them, not for all of them, but for some of these assets, that was the last time we've seen risk levels this low. And so that's just something to keep in mind as we look at this, is that this could just be a healthy thing as part of a broader uptrend. But of course, this depends on your thesis. If you believe we're going into a bear market, then seeing risk at these levels is not all that appetizing. If you think we're going into a bear market, you'd probably be waiting for risk to go all the way down to -4, -5 for some of these different assets if you think that way more downside potential is coming up. And so again, it's all kind of based on your thesis of where you think the market's going. But certainly if you have the conviction that we're still in an uptrend overall, we're still in a bull market, then these risk levels are looking more and more appetizing. Now again, it's still, in my opinion, it's still too early to know definitively if this is the best that risk is ever going to get to. It's all going to be dependent, in my opinion, within the next month or so with Bitcoin, what it's able to do. We'll get better indication of where the market's going, I think, probably within that time. But certainly what we can see is that the risk has fallen relative to what it was a few weeks ago, and so these entries are looking more palatable than they did back then. But again, there's no guarantee it can't fall further, and so that's not financial advice. You should form your own opinions about those things. Alright, if you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter. And remember, with the UDPI, we're all going to make it.